So go ahead, Paul. Go ahead and
Okay.
take over.
Well, it's my pleasure to introduce our co-speakers today on the subject of zombies, gamblers, and mostly employed. This topic relates to two of RI's areas of focus, supporting education and growing local economies. Dr. Hart Hodges is a familiar face to our club. He is an associate professor of economics at Western Washington University. He is an associate, where he serves as the director of the university's Center for Economic and Business Research. In addition to his work at the university, Hart is a registered investment advisor and president of Waycross Investment Management Company. His academic research interests include natural resource economics and environmental policy, health economics, and regional economics. He is currently working on projects that focus on tax reform and healthcare finance. Hart volunteers his time on several boards and through the center helps a variety of nonprofit organizations. Hart is currently on the board of the Northwest Workforce Development Council. Joining him today is James McCaffrey, and he is director of Western Center for Economic and Business Research. In his role, he broadens the connections between the university, the College of Business Economics, and real world through student internships, classroom-based projects, and consultative projects on faculty, staff, and students. James brings a unique perspective and critical tools to problems faced by organizations today based on professional and community service experience. James' core skills are in areas of research, financial modeling, business development, branding identity, marketing, finance, tax and legal issues, operations, growth management, and strategic partnerships. Hart, James, welcome to the Rotary Club of Bellingham, and you have the floor.
Hello, Hart.
Hello, Gary. Thank you, Paul. I am going to, hopefully I can share my screen. Are you going to?
Yeah, maybe I have to let you, hold on one second if I haven't. Give me just a second. Okay, you should be able to do it now.
All right. So should be visible. I'm going to run through slides very quickly, and James is going to interrupt me. We welcome interruptions from you. We're going to try to, Paul, we have about a half an hour. Is that, Gary?
Yes.
Okay, so going to cut it pretty tight, but some questions at the end, but do feel free to interrupt. We're obviously going to tell a story about a fairly resilient economy with lots of risks, obviously to the downside. A couple of things that I want you thinking about initially. We had a significant spike in personal income in the United States in the second quarter, which changed spending, changed a lot of the data. And we're going to have to be playing with some different sorts of data because your typical Bureau of Labor Statistics or Bureau of Economic Analysis data is very lagged, not very helpful at the moment. I want you to start thinking about this recession being very, very different depending on where you sit. And then we'll close as we're going through a mix of comments about the current stock market, a giant experiment with the amount of stimulus and debt. But we're going to just jump right in and try to get you thinking about these are initial unemployment claims. So people that are filing. The little black bars that go back from 1st of 2019 show the scale that we used to see. And we used to talk about that variability as being important, and then bang. So unprecedented number of people when the economy closed, and then a rapid bounce back, but we're still sitting at about 1 million people filing for unemployment. Flipping that around, this is the unemployment rate. So how many people are actually unemployed as a percent of the workforce. And you see the run up to almost 15%, back down. And we can start talking about whether we're going to see a V-shaped recovery or not. This one's upside down, obviously, but you see the beginning of the V. We're still sitting, though, at 10% unemployment. And that's higher than we had in the last recession. And really we've only had unemployment that high once since World War II. So you can ask, oh, but most of those people are going to come back to work pretty quickly. And we might counter with, oh, will they? And one question is, where do they work? This graphic is just intended to show that things were fine. A little bit of a slowing trend in employment in clothing stores. These data are national. And you saw clothing stores shrinking, not surprisingly, and then the big drop. And that reminds us that a lot of what we're seeing with COVID when it comes to the economy, it has accelerated a variety of changes more than it has created something brand new. But grocery stores, financial activities, employment in those sectors are actually up. No real COVID dip. And then you've got other sectors, jobs in clothing or arts and entertainment and recreation that are still 25% below where they were. So this, if we had more time, would be a great starting point to say, who works in these different types of jobs? Because the differences are striking by race or gender. And then there's some follow-on discussion about, well, if we're getting healthcare through our employment. And so the thinking about the impacts of COVID-19, the economic impacts, that is, you do need to keep in mind different groups are feeling this recession very, very differently.
I would add wages as well, right? You talk about genders and race and all kinds of different ways to think about who's impacted these things, but also think about what the classic jobs, and we'll show you data here in a couple slides, but think about the wages of these different types of jobs as well, on who's being impacted more than others.
You mean lower income jobs feeling it worse than high income?
Well, I wasn't going to ruin it.
All right. The top left graphic shows personal consumption expenditures for the United States. The data are lagged. We don't have any data for June yet. So we haven't finished the Q2 data, but anecdotally, reports from the Targets and Walmarts of the world say that spending continued to rebound in June and July. So we saw the drop in March, April, then recovering. And a big question mark is August, right? Because the $600 a week added benefit that folks were getting when they were on unemployment expired. We're wondering what happens next. Walmart has reported significantly lower sales first week of August. So where goes this recovery?
Hart, you said data lag, and I want to drive home that point. So when we look at data, our data can be up to 6 months late. Something happens and we don't see data for up to 6 months. Some data, it's a month, and everything kind of falls in between. And then that data that we got 6 months behind, and then 3 months later, we get told it gets revised. And so just keep that in mind as you're looking at these different data points. Be really aware of how data is being collected and what age it really is, because there's some data and we'll see some high frequency data here in a little bit, but where it's much more almost real time. But other stuff that comes from the federal government, it has some significant legs to it, and it's subject to revisions.
Maybe we should ask Gary when to expect a widely available vaccine, but some of the numbers going into economic forecasts call for a story like approval of a vaccine this winter, very late 2020 or very, very early 2021, vaccine then becoming widely available fall of 2021. That scenario lets GDP return to its pre-COVID levels at the end of next year, with the labor market lagging and unemployment staying elevated into 2022. And then we ought to ask ourselves, what else is happening with the recovery, right? Because business travel, other things won't look the same in 2021, 2022 as they did in 2019. The other wild card for us and anybody working on a forecast, public sector is really struggling with sales tax revenues down, or university budgets. I don't know, just say they're ugly. But especially for Washington, having a budget for this year that was already set, legislature not going back into session probably until January, we don't know what the cuts are going to look like. We can guess. Some people are saying maybe they won't be very big at all because we'll get federal support, but a lot of question marks about what that'll do. And remember, in Whatcom County, public sector accounts for about 16-17% of the employment and at least 20% of the wages. So what happens on the public sector side can be very, very important in any outlook. And that's just a great big guess for us at this point. This picture shows the bump up in income nationally. All right, so we saw over a 7% increase, and the teal sort of line, the top line, is personal income adjusted for or including government support. And so you see what would have happened, versus what did happen. So the government really stepped in and filled the gap and filled it hugely. So we've seen a lot of strange things with spending, and we'll get into this, but that bump meant that, say, take West Virginia. Spending in West Virginia was higher this summer than pre-COVID. Right? Low-income folks getting and unemployed getting that money and spending it. Some of it may have found its way into the stock market, but we'll get to that. This is our graphic that shows my recession may not be yours, right? Employment for those earning over $32 an hour, the new measure of wealthy, perhaps.
That's $67,500 per year, just to give you a frame of reference.
Employment is up above pre-COVID levels. And as you work your way down the pay scale, employment falls. This is what James was alluding to earlier, that you're getting a big hit to the jobs of those at the lower end of the spectrum. And then also a lot of the jobs that are dominated, sectors that are dominated by minority groups or women, home healthcare workers, retail, a lot of face-to-face businesses, smaller services, and restaurants are in this, eating and drinking establishments, wait staff, right? So if I can work from home, or I have the ability to do my finance job, I'm in great shape. If I'm a waiter or home health aide, not so much, right? And remembering that you could actually say that the recession is over for the wealthy, and it's not going to be over for a long time for these other groups.
This chart helps explain kind of what's going on in the housing market as well, and why housing prices have maintained their strength, is that your typical home buyer has not seen the kind of impact that your lower wage worker has seen.
And questions about what happens to rent and rent payments and delinquencies from those lower wage earners who predominantly rent, and the benefits have just decreased or evaporated. Okay, so those in the higher income brackets doing well, but they're not spending. And this is some new data that's coming out of a group at Harvard. It mixes credit card spending, GPS tracking, and other high frequency data. So what they've done is they know where Gary and Paul are shopping, and they know how much they spent, and they can track them back, and they know whether they live in a high or a low zip code in terms of earnings. So when we say high income or low income, it's actually the zip code where these people live. So the wealthy have kept their jobs, or the jobs have been added in those categories. Wages are holding up or going up, but they aren't spending. Right?
Which is partly why we see some of the reductions in some of those service-based jobs.
Right. So they're not going out to eat. A lot of people aren't going to the doctor. Low income spending. Now, James mentioned some of the other states, and I mentioned West Virginia. So the overall U.S. in these low income zip codes, spending is down 2%, but in a number of states, it's actually positive, above pre-COVID levels. Another thing you might notice about this graphic is up until early July, things were rebounding, and then they stalled. And I'm back to we have questions, and we have questions about August, because I think what's happening is people rebounded as much as they could to a comfort level. I'm still not getting, if I'm a high income, I'm still not getting on planes. I'm still not going to a crowded restaurant. I'm still not going to sporting events, et cetera, et cetera. And the shape of the recovery depends on that comfort level. So I would say V shape up to a point, but not a full V. And James, I don't know if that's a backwards square root sign.
Sure. We've had a lot of interesting discussions in the economy world about the shape of the recovery. Is it it's not an L, it's not a V, it's we keep coming up with different letters.
The National Association of for Business Economists just came out with their survey, and they had a record number of people, over a quarter, imagining a double dip recession, which is a very rare thing. But should the virus kick up or combine with the flu somehow in the fall, and things have to stop again. And it's not just stopping, it's that comfort level. So I'm not going to spend much time on this slide. We do a regular forecast for the Puget Sound area, Snohomish, King, Pierce, Kitsap counties. And when I say we're having to massage the model, it's not that we're changing what the forecast is, but we don't have data for May, June, July for a lot of the variables. So we're having to guess what happens, right? What's happening with spending, et cetera, to build in the recent past to build a forecast. So we're having to forecast the past and the future. And you can see we're expecting a pretty noticeable drop in employment in the region, and then a slight rebound in 2021. GDP is going to rebound faster than employment. Personal income, as you can see in our forecast, bouncing back faster. We're really looking at something like a 30% annualized drop in GDP second quarter, rebounding fairly steadily into 2021, but that's not really a V, right? It's a V for the first part, and then sluggish to get all the way back up.
Hart, you said 37% annualized GDP. Is that a 30% drop in GDP?
All right, so this graph says GDP falls a little over 5% in 2020. The drop was all in the second quarter. So if you had, let's just say, a 7% drop in the second quarter, but you annualize it, that's about a 28% drop for the year, loosely speaking. And most all of the GDP data are always annualized. So if you read that the GDP drop of 30% in the second quarter, Lord only knows who came up with it. But that was, if that quarter, same thing happened for a year, that's what you'd get. What's going to happen to education? And I don't just mean is school going to open in person. When we were building these slides, there were still some question marks about which districts were doing what. But I mean, going forward and thinking higher ed, how do we leverage the technology that we're all finally learning how to use? How do we make the delivery of education better? And it's not that education goes fully online. Parts of education are interpersonal, but shopping behaviors will change. Remote work, business travel, it's not going to bounce back to where it was. Where people choose to live. If I can commute 2 days a week instead of 5, Am I willing to accept a longer commute? Don't know. And I'm going to say the jury is going to have to remain out on that for at least a year, because some employers right now are saying, oh, work from home, but what about productivity? Will they be saying that a couple of years from now? And that'll shape the economy. Seattle Chamber did a survey with Commute Seattle, and in the interest of time, I'll have you just focus on the one work remotely a few times a week, down near the bottom. Or if you want, never work remotely, the first one, right? People were having these conversations before COVID hit, and they were especially having them around how do we manage traffic on I-5? And can businesses encourage their workers to work from home a few days a week to lessen congestion? A lot of businesses were saying, no, thank you. Our workers aren't as productive. We like the collaboration. We like the sharing of ideas and so forth. But now we have this shift. And we'll see what happens with commercial real estate. We'll see what happens with commuting, because I think we're all overstating some things now, but there will be some change. Trying to dive into what are the effects of COVID locally. And if you look at Whatcom Skagit down to King County, you see a dark orange. We had a very high percentage of small businesses get PPP loans. The Peoples and Washington Federals and Heritage Banks and others, they were all very, very active. And so we're feeling the same sort of hit to employment. We're seeing the same sorts of drops in spending, nothing unique there, but a fair bit of PPP money, more PPP money than a lot of areas. So as we try to piece together data to build a forecast, the data look fine. We have delinquencies on rent still better than the national average. Businesses open about the national average. So we think things look fine. It just feels quite precarious. And digging into those data a little more, this is Washington. So employment, if you look at the overall average, down 5% at the moment. And you look at it, high wage versus low wage, much bigger hit, as we already said, to low wage. So that's for the state. Digging into Whatcom and Skagit. Top left is Whatcom, bottom right is Skagit County. A little below the state, but doing better than the U.S. Not as good as the state because King County's doing well with Amazon, Microsoft, et cetera, et cetera. Better than the U.S. because we got PPP money and small businesses have been able to stay open. And that little heartbeat shape right around July 1st, we're trying to find out what glitch in the data that was, because we don't see that when we look elsewhere, and we don't know it was a reporting issue. So much data to be counted, and it's very imperfect. So that's on small businesses. Opening, total spending by consumers, strong, right? More spending here than pre-COVID, and that compares very, very favorably to the US overall. So again, the PPP money was in, businesses are open, people are spending. Now, remember, it's lower income spending. So there's the negative twist to this is we don't have high incomes in Whatcom or Skagit County. Right? We're below the US average in terms of income. We're above the US average in terms of spending, because those things are correlated in that way. And if anybody has questions about where these data coming from, the website is called tracktherecovery.org, all one word. It's a fun website that has this high frequency data. Happy to entertain a question or two, because I'm otherwise going to jump into the disconnect between financial markets and the overall economy. All I've done here is just grabbed a half a dozen bullets that are supposed to make you worry, and then follow up with saying, that's okay. Stock market's at a record high. What the heck is going on?
Dow's looking good today, Hart, so all is well.
Okay, so then we'll move on. Dow is up. We're going to say it's a three-part story. So I'm going to just quickly dig into these three issues. I think by far the most fun is the Barstool Sports day trading story, but we'll get there. The first one, that the restaurants and things you see closing aren't the S&P. Remember that Microsoft, Apple, Amazon, and the 5 biggest companies are the S&P today, right? Because they account for fully a fifth. It's actually more than 20% now of the capitalization of the S&P. And those companies are all doing quite fine in the pandemic. So the S&P is up. Same story for the NASDAQ. And just remembering those indices don't measure Main Street. They're not an indicator of what's happening with small businesses. And if I can do this really quickly, this story of these large growth companies doing well is not unique to this recovery. This is a graphic that shows returns by, these are US, just dividing up the asset classes, large, mid, and small, and growth and value. And if you look year to date, 1 year, 3 year, large growth, the Apple, Microsoft, et cetera, story has been the dominant story. As an academic, it's you wonder, because if you look, since 1940, small has outperformed large, value has outperformed growth, but not over the last 1, 3, 5 years, right? It's a growth story, and that's been very accentuated by COVID because a lot of the small companies are closed. They're not getting the opportunity, and you're getting a lot of money flowing into these mega cap businesses that are network effects, et cetera, et cetera. Go off on a whole talk about this graphic by itself, right? But a number of things COVID has accelerated. Part 2, don't fight the Fed. Or the stock market can stay irrational longer than you can stay solvent, whichever version you like. But there's a lot of money going into the economy. 10-year treasuries, 0.6%. Why not take a little risk, get into the stock market? So on the valuation side, if you're looking at through a lens of interest rates, things aren't that crazy. But a serious question is, what happens with this money longer term? Is it inflationary? We're going to say it's going to find a home. And if it doesn't find it in inflation, regular inflation in consumer prices, keep an eye on asset prices, home prices, stock market, the like. But we can come back to that if there are questions. The third part is the more interesting. This graphic was made in June, and it's just gotten more dramatic all summer. This is the number of frequency of searches for puts and call options, day trading. And this is when the president or founder of Barstool Sports said Warren Buffett was an idiot, that day trading was the easiest thing he's ever done. So what's the correlation between S&P price and the underlying earnings? And in this case, just picked forward earnings. So what's a company expected to make in the coming 12 months? The bottom right shows the long-term, or at least the last 20 years worth of correlation between the underlying earnings and stock prices. And they're very highly correlated. The upper left graph just shows the last few months and how they've diverged. And the last time they diverged like this was the dot-com bubble. And we're not predicting dot-com 2.0. Things are quite different right now than they were then, but it does give you pause. And there has been a lot of speculative trading in even bankrupt companies, Hertz, JCPenney. So it's a fascinating time. We had zombies in the title. Companies able to stay afloat because they can continually roll over their debt at ever lower and lower interest rates. It's just a very curious time. We will see where it happens. Our view, stock market needs fundamentals like those earnings to do well over longer periods. In other words, they're correlated over longer periods. The assumption right now is that bad economic news is good news for the stock market, because if something happens that's bad, the Fed will just step in. The lose-lose situation the Fed's in right now is they're either going to have to decouple the financial markets from the overall underlying economy more, or risk a sell-off if they say we're not going to do as much. So it's quite a sticky spot for the Fed at the moment. We see deflationary pressures carrying the day in the near term, business closures, people not spending. Looking out longer term, giant experiment in terms of, say, modern monetary theory. What do we do with the debt? It's possible, see some sluggish growth because of the debt and demographics. At the same time, inflation kicks a little bit. Hope not. And that is certainly not a foregone conclusion. Keeping an eye on the clock, talking as fast as I can. No real economic recovery until people have the confidence to spend, to get on planes, to go to busy restaurants. That requires not just the vaccine being approved, but then widely available, but also people using it. Right? I'm going to want to know that the risk to me, if I go do those things, is manageable. The impacts really do vary by group significantly, and I can't underscore that enough. And we need to think about not just am I doing okay, and are the people that I know, but what's this recession look like for other groups? I mentioned the liquidity; it'll have consequences. Stock market, I think it's fascinating. This summer, there's been more trading through Robinhood app on people's phones than Schwab and E-Trade combined. So it's a different world there. Gary, I think I'm at 25 minutes. So we have a few minutes for some questions.
Let's give them our social media links, and we'll tell them what that is while they're.
I don't do social media, but they are just for you, James.
That's why I'm here. So we post up to 6 articles every day that we're reading that we think is interesting. Sometimes we disagree with them, and we post information about that as well. So if you're on social media, feel free to follow us on your favorite vice, as it were. Hart mentioned the Puget Sound Economic Forecaster. That's a subscription product that we have. There is a quarterly newsletter as well as monthly updates. There's information on the web about that as well. So that's the commercial on that. But the social media is fun. We also do a podcast every couple of months on about a month after we publish the Puget Sound Economic Forecaster. We'll do a podcast, and we do about an hour conversation about something to do with the economy that had out of our last issue. So kind of a fun way to engage your economic thinking. So, Hart, the one thing we didn't talk about that is interesting is the changes in retail and retail spending. And so we do expect to see shifts in how people spend money on retail and how that's working as we turn the calendar pages forward. You're getting used to ordering more things online. Interestingly, it's not coming from Amazon. It's coming from brick and mortar type businesses with an internet presence. So Target and Walmart and even the shoe store down the street are actually doing better for growth on online transactions than Amazon is. And so we do expect to see those kinds of shifts continuing to happen with consumers as they embrace a new world as we come out of this.
Okay, so Hart, I have $100,000 burning a hole in my pocket. What do you tell me to do right now? Do I invest in real estate? Do I put it in the stock market? Do I buy bonds? Do I hide it under the mattress?
In fact, if I could go back to that slide, I wouldn't put it all under the mattress, but it's kind of ironic that cash has done better than most assets over the first part of the year or even the last year, asset classes. You're going to hate the answer because it's going to be the same that you would have gotten pre-COVID. I would diversify. There are winners and losers, right? Coming in this and coming out of the pandemic. So I think there are still good things to do in the stock market. Bonds have gotten tricky, right? I mean, where do you do short or long? What quality do you go after? Who'd have thunk it that the Fed would be so supportive and be buying bonds? Does that reduce the risk of going out in terms of duration or quality? If you might find some good buys from somebody scared in the real estate market. This too shall pass. The debate, a big debate on the commercial real estate side about, oh, we don't need as much commercial real estate anymore because people are going to be working from home. Yes, but you'll also need more square footage in the space that you have. So there's going to be activity. Just need to be buying the quality. I would not buy a strip mall. I don't think you ought to put your money there. But I get to turn it around because all of our economic forecasts are based on assumptions about COVID. And we're following University of Washington's COVID modeling most. And the assumption—
It's widely inaccurate so far.
What's that?
Which has been widely inaccurate.
That's the reason I would say, the idea that vaccine approved this winter, widely available, maybe early fall. Is that timeline sound reasonable to you?
Early fall 2021. Yes, it does.
For widely available?
Those are the numbers. What you said are the numbers that I'm also quoting.
Yeah.
But I think that there's going to be a lot of resistance early on to taking the vaccine, and how it gets handled in terms of whether the vaccine is mandatory or not. And if there's some adverse reporting that goes on early on when it first becomes available. I think there's a lot of politics that are going to play into the vaccine. But I think that your timeline is pretty much accurate. The people who think there's going to be a vaccine by the end of this year, other than in research studies, are premature. And I think that optimistically, midsummer next year, more practically third quarter next year, which is what you were saying. Yeah. And I think that those are real numbers. Like the other question is going to be, do we continue the same, treatment plan that we're on now in terms of keeping the economy under wrap when the numbers change? But that's a much bigger topic. Let me open it up and see if anybody else has any questions, because I need to bring this to a close pretty quickly.
I have one quick question, Gary. Hart, how many businesses have we lost in Whatcom County permanently at this point, do you think?
We have no data on that locally. And I skipped a slide. There was, left it out nationally. And James and I were embarrassed because the data come from Yelp. And I don't consider that to be the world's greatest data source. But they were saying 59% of the business closures have become permanent. So they're now saying of the restaurants and other businesses that you see closed, assume a little over half are permanent now.
Wow. Okay, thanks.
So,
one last question.
Art, this is Phil. How you doing?
Hey, Phil.
You didn't mention in any of your discussion the impact of the border being closed on activity here in Whatcom. Do you have anything to say about that?
We talked to folks at the Border Policy Research Institute and actually some others to try to figure out. And the expectation is it's going to be closed for months still, and that certainly affects retail. But thanks for pointing out. We were hoping no one would say it. The retail data is so lagged. And we remain confused because what we can see for mortgage delinquencies or rent delinquencies and other things that we're doing better than the national average. The numbers look fine. As we were saying, that maybe it was the PPP money, but we've dodged what you would think would be very, very heavy blows, whether it's the border or lack of tourism. And the numbers that we can get still look okay, right? The spending, what they can say is spending looks stronger than you'd expect. I don't know how long that can hold up.
Thank you.
Well, I'd very much like to thank Hart and James for a great presentation. I'd like to do this and have another half an hour, because this is just way more material than you can reasonably cover in a short period of time.
And I hope we didn't just dump too much on you, but thank you very much for having us.
I'm going to go on that Western CEBR and start educating myself.
There you go.
Thank you both.
Thanks, everybody.
Quick COVID update. It's been a good week. My glass remains half full. The last reporting that the county did was on Saturday. In the week period since I reported last, there has not been anyone admitted to the hospital. There have been no deaths in that period either. The downward positive test trend is continuing. For the 2-week period from August 7th to 20th, there were 27 and a half, because there was one out of the expanded, positive. For the last week, 8/14 to 20, there were only 10.2. So we're right on the cusp of being able to get below the positive test line that would allow us that metric, remembering that all the metrics are still frozen. Inslee, as I've continually predicted, is going to change the rules as we go, and he changed the rules on movie theaters and bowling alleys, allowing both of those, which previously would be unable to open at this time, to being able to open shortly. The hospital is busier than it was before. It's now, it now has 9% open beds, when the goal in the phases is to have 20% open beds. But as I mentioned, there hasn't been anybody in the hospital with COVID. So I look at that as good news. From a phase perspective, they look at it as bad news. You know, at some point in time, we're just going to have to change the metrics, because they just don't make sense in what's going on with the virus at this point in time. But overall, I remain optimistic. There are still people getting sick. Every day there are new positive test results. Most of those are coming from contact tracing, rather than people who are just showing up with symptoms that want to be able to become tested. In this next week, we're going back to offering widespread community testing without a physician's order, both in Skagit County and in Whatcom County. Skagit County's been doing it continuously, and they've gotten so many people from other counties that have come to Skagit County that they ran out of money far ahead of their prediction. So Skagit now is requiring that you show residency or a job in Skagit to get tested in Skagit. Whatcom hasn't had widespread testing except for the weekends that they did the drive-through and people waited for hours to get tested. At all of those mass testing types of experiences, the positive test result has been far, far below the general test result. So people who are presenting thinking that they're infected aren't, or at least they're not getting positive tests. We still do not know what the false positive or the false negative rate for the antigen test is, because we still do not know what the prevalence of the disease in the community is. And it is still my opinion that antibody tests are not worth your money. So that's my COVID report. I'm just a couple minutes over. I want to thank all the people that made this meeting possible. Sandy, of course, who makes everything possible. Mark Niddle, Dominique, Jim Cunningham, Doug Cole, Steve Band, Ken Marzocco, Mike Plankovic, Paul Gray, Paula McCandless, and our terrific speakers. And with that, we are adjourned. If you want to stick around and talk a little bit, you're welcome to do so, but the meeting is formally adjourned.